Well, imagine you could read your financial advisor's mind before you even stepped into the office for the first time. Well, today we're going to talk about some things that every financial advisor wish you knew, and every investor can benefit from the things we talk about coming up next. Well, hello, welcome in. This is Retirement Reality. I am Ben George with Mike Koinen. He is the founder and owner at Principal Preservation Services. They got offices in Wisconsin and in Minnesota. So whatever's most convenient for you, you'll be able to find them online, though, at principalpreservationservices.com. Mike, I know you meet with people all the time. Your schedule is busy. And I know there's some things you wish just, hey, when you walked in, if these people knew this to begin the process, it'd make things a little bit easier.
It definitely would. I mean, I come into a meeting expecting people know everything, which I shouldn't, but I give them the benefit of the doubt that they know a lot. And going through the meetings and the process that we go through, a long kind of process with people when they come in, is find out they don't know as much as I think they know. And it's not because they're not smart. It's because you're busy, you're working your career, and you're just trusting the person you're working with, or you're just trusting the 401k plan that the plan sponsor put you in, and the information they give you. So it's unfortunate, but we want to do as much educating as we can. And that's what we spend a lot of our time, is filling in those gaps of those pieces that are missing with understanding about retirement planning and investing.
Absolutely. Education is a big part of it. That's why also you can find Mike on 830 WCCO every Saturday as well, if you're in that listening area there in Minnesota. But also find everything online at principalpreservationservices.com, video, podcasting, a lot of different stuff. And today's conversation, Mike, we're actually going to break up into two parts because we have a lot of different things we wish investors knew. So we'll kind of break it down into two episodes and break it up a little bit. But I want to jump right into it here. Again, let's start with this one. I know you wish that everyone truly knew what they're paying for their investments, because you don't truly know all the different fees. Not everything's very transparent, is it?
Not, yeah. If you're working with a broker dealer, typically it's not transparent at all, especially in those employer sponsor plans. Most people say, I don't pay any fees in my, just say it's a Fidelity 401k or Empower or whatever company that might be. They don't think you pay anything, but that's not reality. I usually direct our clients to a website. You can Google smartasset.com 401k fees, and it pretty much shows that the research that they've done found that the average 401k fee is over 2%. I think it's 2.22 is the average 401k fee. And I just remind people, if you go down to Kentucky, Covington, Kentucky, where Fidelity's headquarters are at, and you see their buildings and the thousands of employees, do you think they're really working for your $25 a year annual fee? So typically not. So there's fees, with that. There's cost of the investments. There's management fees. They're not doing it for free. They're not financial missionaries. I jokingly tell them sometimes, but there's definitely some fees, and we will look at for those fees for you, so you can understand that you haven't been doing this at no cost. There's been a cost to you. But when you get your statements, they just show you what you've netted, not what the gross return is, and then they subtract the fees. They don't work it that way. They just show you your net returns.
All right, so that's the first thing I know you wish people knew. And again, we have a long list we'll go through here. But when you talk about investing, I know everybody likes to kind of look at the upside potential, Mike. We get caught up in okay, where could this potentially go, rather than looking at the true risk that we have within our portfolio.
Yeah, it's great to get the upside, but the reality is, if you're getting a lot of good upside, that means you're taking some tough downside risk, unfortunately as well. And I usually tell people the risk, I could tell if you're investing more aggressively than what your tolerance is, because if you're one in a tough market, it's like 2022, where a lot of people were afraid to open up their statements. I said, if that was you, you're obviously investing in more risk than your comfort level. And it's unfortunate. And some of these, sometimes the advisors are just not listening to you as a client to invest you in the appropriate risk level. They invest the way that they think you should invest, but not really how your risk level should be. And then a big problem is those employer sponsor plans. You get 15 to 20 options to pick from, and they just kind of group them in categories. The equity portion, the middle moderate, which is a mixture of equities and bonds, and you get bonds, and you get some international, and and maybe a stable value fund and all those target date funds. It's hard to even understand the risk. And most people thought they were putting lower risk in their portfolio by choosing a target date funds the last 2 or 3 years. And they lost more money than if they would have been in the S&P 500 index, which is a more aggressive portfolio, because the bond portfolios, the bond portion have been so bad the last few years that they're still probably haven't recovered yet. So it's really important to know how you're investing. And we have a great software we use to identify that risk and give you like a risk score, like a speed limit sign. It's easy to understand.
Yeah, that's important to know that, again, why you want to build out a plan with Principal Preservation Services. And I know when you're investing too, Mike, the hard part is, you can research everywhere. You can look around online, you can read, you can watch videos on YouTube, but you don't truly know the motivation behind the message in many cases. And I know, with this, what we do is very educational driven. We're trying to be informational, but not everything's like that, right? Some platforms, they take a different approach to it.
Yeah, we see ads out there. I mean, well-known, Fisher Investments will talk about, we don't like annuities, you shouldn't either. But the reality is they offer. Their advisors has known to been offer annuities. So, you got to understand they're trying to get, clickbait, people to click on ads so they can get you to call. And, the other part is we do better when we do better. That's how all fiduciaries for the most part work, but they act like they're innovative and they're not. You look at some of these TV programs and they're recommending, this stock and that stock. And I remember I think it was earlier this year, Jim Cramer was recommending you buy this one stock, and literally within the next 2 weeks, it was down 30%. So be very careful of any stock tips and things like that. Remember, these are TV personalities. A lot of them they had to give up their licenses just to be up on these platforms. Like even Susie Orman doesn't carry licenses anymore, but she is really in the entertainment business and looking for, and I think she gives really good advice, just to be honest, but they're not giving you, she's not telling you what to buy and why to buy it, but they're just giving you generalities a lot of times. So be very careful with the information you get. You don't know who they're paid for, who's endorsing that program, to push maybe a certain fund, or you go into mutual funds or whatever that might be, variable annuities, or, there's so many, like you said, there's so much unknown behind that. We don't do any advertising when it comes to that. Our goal is getting in front of people's faces and referrals. And this is our advertising is education. We're not paid by anybody.
Yeah, I think that's what's tricky, right? Is I think a lot of times there is oftentimes good meaning behind what people are saying. But again, it's entertainment driven. They want you to watch. They want you to react. They want to push on your emotions. So, a lot of it is just being aware of that it may not fit you exactly. So again, we want you to know that there is a different motivation behind the message oftentimes.
Yeah, for sure.
What about this one, Mike? We wish everybody knew the importance of setting realistic financial goals and checking in on them. I know it's easy to kind of say, I want to get to retirement. I want to be retired. I want to have X amount of dollars, but you need to have realistic goals that you can track and follow and chase, correct?
Yeah, I think even having just goals in general. Some people have not set goals, or like you said, sometimes they're just not realistic. And these could be goals for retirement. These could be goals for usually what I hear is the goals, they want to hit a certain dollar amount in their portfolio before they retire. I said, don't get too set on that. Because, that goal used to be, if I had $1 million, I'm going to retire, right? Now that people are changing that up to a higher level, once they hit $1 million. I have a client, he had recently passed, but his goal back in 2002 area was, I want to get it was 2000, right before the tech bubble hit. His goal was to hit a certain level of financial level with his stocks. And, unfortunately, he never got there because the tech bubble came, and he was heavily in .com, these tech, .com type stocks, and he took a big hit. He lost over half, and so he set his level too high, or it was too stubborn with it. Instead of seeing what was happening, he was a bank president, so he kind of knew. He said, I was giving my clients advice to stay away from these stocks, that I was hanging in there. Trying to hit that level, and I never got there, and it dropped before I got there. He got close, but he didn't get there. So the key is set levels of, I think realistic is planning. Plan what you need and see what the reality is. I know certain companies like Fidelity said you should have 10 times your last year's salary to have enough for retirement. Well, that's a generality. That's not, I don't think that's realistic for most people. That's not retirement planning. That's just throwing a number out there to, grab some traction for, with people to have them come in. Reality is we find clients don't even need that much. Sometimes they need more. It all depends where you're at. So the goal should be, let's get some retirement planning done, find out what you do need for retirement.
Yeah, which takes us right to the next one that we have on the list is, we wanted to make sure that you prioritize and understand the value of long-term planning versus trying to chase these short-term gains. It kind of ties into what you're saying already, but you got to see the big picture when you're doing the planning, correct?
Exactly. Yeah. So obviously you want, when we're doing planning for clients, we want to find out what you can do in this year, next year, the next, short-term goals, but it's ultimate for the long-term goal, right? So it's fun to, most of our clients are, our niche is really working with people close to or in retirement. 58 and older is typically who are the new clients that come on board with us. But it's fun to work with their kids. So we get a lot of referrals from our clients' kids. So we're working with people in their 20s and 30s and sometimes even 40s. And it's fun to work on this is the short-term thing that we're doing. We're contributing, we're being consistent, we're paying down debt, we're doing all these little things right, which just adds on to the long-term effects of being able to retire when you want. So we have to look at short-term and long-term at the same time.
All right, last one here for this part one of the things we wish every investor knew. And again, it's that one-size-fits-all planning advice just doesn't work.
Yeah. We see that a lot. There's certain broker-dealer firms that when they come in, they say, we're working with so-and-so. I go, so you're probably invested in these funds. And they go, how'd you know? I go, that's what they sell. No matter if you're in your 20s, 30s, 40s, 50s, 60s, they sell the same type of investments. And I said, it's no different. Other firms are known for selling variable annuities and life insurance. And, we see the trend. Or other firms that just do what we call it the shotgun approach to investing, that they're just putting a little bit in large cap, small mid cap, international, and bonds. And they just throw you in a little every sector. And so, why they can kind of set it and forget it, the Ronco version of investing today, which we don't believe in. You want to be more actively managed. So we're seeing a lot of these blanket portfolios just thrown out there just for everybody. And if it was that easy, who needs an advisor? Just go do it yourself. So there's a lot more to it. And I get a little irritated. That's what a lot of this advisor world has turned into for outside of our office. They're just doing these blanket investments. But you shouldn't be investing the same way today if you're 2 years or 5 years from retirement than you were 25 years ago, right? So things change as you get older, and there's a shift from accumulation to let's preserve what we've built, and let's not focus so much on the accumulation. We're not against that, but let's make sure that we can have this money last our lifetime and still leave a legacy without being too risky.
All right, that's part one. Again, if you want to begin the planning process, you want to build out your retirement reality roadmap, get in touch, 855-987-8888, or again, find everything online at principalpreservationservices.com. All right, part two to be continued. Make sure you subscribe to the channel. If you're not listening or watching on YouTube, please come over, join us there as well. Mike, as always, appreciate the time.
Yeah, thanks again, Ben. We'll see you soon.
Investment advisory services offered through Alpha Star Capital Management, LLC, an SEC-registered investment advisor. SEC registration does not constitute an endorsement of the firm by the Commission, nor does it indicate that the advisor has attained a particular level of skill or ability. Alpha Star, Principal Preservation Services, LLC, and Principal Wealth Services, LLC are separate and independent entities. Insurance products are offered through Principal Preservation Services, LLC, a Minnesota and Wisconsin insurance agency. Investment advice is offered through Principal Wealth Services, LLC. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products offered by Principal Preservation Services, LLC. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered or guaranteed by Alpha Star.